Hi, welcome to the market view for the 27th of February 2007. And starting off with the daily chart, we can see the market has definitely gone into a sideways range, and with each successive day we can see that the range is sort of becoming narrower. The overnight market showing trading inside of yesterday's trading, which is known as an inside bar, which would be normal unless there is some sort of geopolitical event that causes the markets to move overnight. So yesterday we can see in the daily chart that we didn't breach the previous day's high, but we did take out the previous day's low. So we can see here that we are getting into this sort of sideways pattern there. It needs to break out one way or the other in order to move on. So this sort of sideways consolidation of prices here is occurring at the moment. So looking at the 30 minutes, it was an absolute shocker for the first couple of hours. You can see there we had a potential short. The market just hit the entry point, turned around, reversed and went up, and then we were offered another 4 potential trades until eventually the market broke out of this sideways action here. So what you're seeing here in the daily chart, this sideways pattern, whoops, I'll just keep that still. We can see the sideways action there. Well, in the 30 minute we get that same thing, and eventually the market has to break one way or the other, especially when it becomes incredibly tight like this. And in this instance you can see this is 50 pips from here to here, from the grey shaded one at the top to the grey shaded at the bottom. So this is showing us a range of around 20 pips, 25 at the most. So you can see that it became really tight coil. It became narrower and narrower, and eventually the market broke, and giving quite a number of pips there. The first green bar to appear 50% above the market didn't trade above. Let's just show you this instead of just trying to describe it. So the market moves lower. In fact, what we'll do also is just put on the, there we go, so you can see where the market moved lower. So you can see the entry point there just below the close of the previous day, and the market tried to reverse on the next green bar. However, two good things: it didn't close above 50% as a test of how much strength it had got to the upside, plus it remained below the 5-bar average there. On the next bar, the market then moved lower down to the psychological level of 166.50, found a bit of support, again tried to come back, failed to close above the 5-bar average, no green bar in sight, and then continued lower once more, trading down to a low of, let's just see what the low was in this bar, 166.20 there, so heading down towards the 166 area. Next green bar appears here, so if you wanted to move down with the market, just locking in profits, you can see there that you've got 166.49, 166.50 is the area where the market then came back to. And again, you can see here, apart from this bar here, that the market is making what's known as higher lows, so which means that the low is higher than the previous bar, the high is lower than the previous bar, and eventually it makes its way through the psychological 166.50 there. It goes through on low volume. That's because we're heading towards the end of the trading session, so there's no selling around, and you see the market then just taper off and then sit on the daily pivot, which it's now doing as well from the previous day. So not too bad of a day in the end, but certainly the first few hours in the morning was pretty desperate indeed. So the market seemed to have redeemed itself a bit yesterday as far as the trading was concerned there. So that's about it for the market. Let's have a quick look at the news, see what we've got out today that could give us a bit of grief. And we've got medium impacts. There's no point in going through them all. Unemployment claims from the US at 1:30 really is when it all starts. Durable goods also, durable goods orders month on month. And then Fed Chair Yellen testifies at 3 p.m. So keep that one in mind. So expect some volatility then, especially if she hints towards more QE. Although yesterday's figures apparently allegedly showed that the tapering is working. Well, time will tell on that one. It's very easy to fudge the figures, as I've said before, and manipulate them and get them to say whatever you want them to say. So it's 3 p.m. really today is the one to watch out for when Yellen imparts her words of wisdom and anything else that she so desires. I'll be polite. Okay, that's it for today. I will see you in tomorrow's. As ever, thank you for your support. Very, very much appreciated. And as ever, thanks for watching.